What's going on? Welcome to our Thursday webinar. Had to think for a second which webinar we're doing. We do this every Thursday at 1 p.m. Eastern Standard Time. We also do a deal seminar. I'm creating new words here. Um, every Tuesday at 1 p.m. Eastern Standard Time. I am one of your hosts. I'm Andrew LeBaron, and joined with Jacob Amesqua. And we are Motel to Apartment Conversions. We are launching a brand known as ParkRise. We will be talking about that brand today, and just a good time. Taking back-to-back calls, trying not to get distracted, and hopefully deliver excellent value to those watching. Hopefully, those who want to jump in and invest in our opportunities and our company.
Absolutely. A lot of exciting stuff going on. That's for sure.
Anyways, already introduced us. Andrew, Jacob is myself, Jacob, and Richard. If you've been with us on previous webinars, you know the team. Just a really brief background. Richard is a partner of ours. He's the president and co-founder president and founder of Family Office Club, and he's one of our co-founders. And then obviously Jacob and myself, and we are redefining the flexible apartment living space. That's what we're doing.
Absolutely. And the reason we're doing that is for investors to preserve wealth, multiply wealth, tax savings, cash flows. We are having conversations with some of our existing investors who are in other projects right now, and they are really struggling with the debt market. And also to raise capital because of the uncertainty in Israel and all the current events right now. And so for us, the most important thing is to really preserve wealth and multiply cash flow. All of our deals have been seller finance deals. And so luckily for us, we don't even have bank financing on any of our properties. We're all seller financed for the foreseeable future. And so very safe investments, and our investors are very grateful for that.
What we used to do, we used to buy motels, specifically motels. A motel is, I would say, a mid to lower grade hospitality asset, not a hotel, in growing areas, and we convert them and rezone them into multifamily apartments. We don't do that anymore. What we do now is we acquire hospitality assets, nicer hotels, and we turn them into apartment style lodging. What we did before, it worked. It worked up to a certain extent, and we found a greater opportunity, a greater yield for investors, and just a overall greater company exit if we were to convert existing hospitality assets into apartment style properties, which we don't rezone. We don't have to re-entitle. There's no ribbon cutting. It's not a lot of back and forth with the cities. We're experiencing that now, and we realize that this is a great shift. Again, no zoning battles, no delays, no difficult leasing. We were leaving a lot of money on the table by not acquiring hospitality and keeping it hospitality. And we just know exactly what our exit strategy is going to look like. We don't do this alone. We're following market leaders that have already blazed the trail for us. They're actively growing, and we're riding their coattails.
So we go through this slide, but some of the problems that we're seeing right now, it's a long development process for either multifamily or new hospitality. And that's our niche, is we acquire existing hospitality assets and we renovate and convert them into apartment style housing. Also, expensive acquisitions, we're picking these up. A big part of our strategy is to buy with a lot of equity and be able to have that buffer in between what we pick it up and the value after we renovate it. And another problem with multifamily is that we're seeing it's very slow to cash flow. And our solution, we are purchasing these hospitality assets, converting a portion of them into apartment style housing, and we're leaving the other portion cash flowing. And a good example of this is our Brownsville property, where we have 40 units open and cash flowing as a hotel right now. We're operating it as a hybrid hotel extended stay apartment, and the other 40 are being renovated. Once those 40 are done, we will flip and continue that cash flow. Some more problems. A multifamily is unaccommodating to certain styles of living. If you get into a 6 month or 1 year lease agreement, it is an astronomical cost and issue for the resident to get out of the lease agreement. There's no flexibility in a traditional apartment uh, leasing arrangement. Our solution is flexible. We're creating apartment style housing where people can live there a week, a month, a year, 5 years, 10 year, however long they want to. So it's solving a problem that apartments cannot solve right now, where we're providing flexible housing that's really suited for locals, travelers. We're finding more and more that this is a great niche to be in. Multifamily, lower yield on costs that comes along with higher acquisition prices, uh, smaller margins. Like I said earlier, we acquire these deals with lots of equity, and with this extended or flexible stay, we're able to maximize the amount of time these rooms are filled, and for a more premium price than long-term stays. So higher yields and less legal risks. If we have to, somebody has to get somebody out of a multifamily apartment, there's the eviction process. We don't have the eviction process, so less risk there. And then there's no need to rezone or work with the city with these apartment style housing assets that we're creating. We can immediately start to run these as is, and just change the appearance and somewhat change the use to be more of a flexible hybrid long-term short-term stay.
We have coined Flexpartment as the new asset class that we are creating. Flexpartments, they do capture an underserved market, a group of people that really need flexibility when they live in a certain area, specifically in larger cities. They need something ready to live in, and they could stay as long as they like. They could be there for a night, a week, a day. They could be there for a month, for a year, and there's no messy, lengthy, highly complicated lease agreements. We're not charging high deposits. We do charge deposits. Obviously, we're prudent about who comes in and who stays with us. And there's just not a long, drawn out approval process. These spaces fill faster, they generate more income, and we're able to fill a property with 80 to 90% occupancy of a myriad of type of individuals, which we'll talk about in a bit. We'll talk about the demographics of who'd be coming around. This is our brand, Parkrise. Parkrise.com is our site. You can visit it. Our mission is we want to provide an all-inclusive living experience, and this is totally flexible. As mentioned previously, these are modern, comfortable spaces. If you ever think of an extended stay America or even a Marriott Residence Inn, this is a step above that. This is a comfort level that has no expiration date. You can stay there as long as you like, and it feels like an apartment. It doesn't feel like a hotel. So we're not committing people to a lease. We're not committing them to, an egregious 1 year lease with cancellation policies. And no, this is allowing the user to flexibly live as long or as short as they want to.
Yep. At last, truly flexible living is really the benefit that we give to residents. And so, some of our advantages, and we'll go through the advantage for the guest, we'll go through advantage for the investor, but we have a seamless online or on-site renovation process for the guest. It is an instant approval. For long term, we will do a credit check of minimum credit check of 550 or above, just to make sure, and no prior evictions. But generally speaking, I mean, very seamless and fast. There's no lease agreements, no formal lease agreements. There's obviously an agreement to stay there with rules they have to follow. But compared to a traditional apartment complex, it's very easy to get in and get set up and go on with your life and just live and not have to pass through all the hurdles of a traditional apartment leasing process. So instant flexible, no leases. We pay for all utilities. There's no switching utilities to your name. And for the investor, these will fill much faster than an apartment complex. I think one of the biggest hurdles with a multifamily value add project is being able to lease, the time to lease, and what is the cost of time being able to fill these after they're renovated. For us, it's instantaneous. You look at a hotel, you look at an Airbnb, it's instant cash flow. And for us running this hybrid apartment style housing, it's a similar model, except it's more stable than a hotel. But we can fill it fast. There's a wider audience, like Andrew mentioned before. We're targeting we're targeting locals primarily, but also travelers, business professionals who need a place to stay for 3 to 6 months. And also, it takes less resources. There's no formal leasing agents and requirements, stipulations with our lease agreements. We don't have to work with the city. We don't have the same process that a traditional apartment complex. So it's very easy for guests to get in, very easy for us to fill. And then in terms of the payment method, what's great about this instant payment method, I mean, you look at an Airbnb, if you have to pay to stay there, right? You look at a hotel, you have to pay to stay there. If there is no payment, we shut it off. We can bar up the room, and there's no formal eviction process that we have to follow. Sorry, you said my mic's cutting in and out, Andrew.
Yeah, it's coming in and out. We get the gist of what you're saying, though.
Awesome.
Better now?
Yeah, sounds good.
Okay, great. So anyway, for investors, there's that reliable payment collection. The 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 non-payments of a traditional apartment renter don't apply to the model that we're running, the hybrid apartment style flexible stays. And then for guests, again, easy move in. Guests can choose when and how they move in, and so for us, it's a lower management burden with having to arrange rooms and give tours and everything like that. It's much easier for us to get guests in and out. And then ultimately, this is apartment style living, but with additional benefits. So for the guests, there's more services than apartment communities. We have, like traditional extended stay, we would have housekeeping. We have more amenities. We have pool. We have laundry. We have other services that apartment complexes can't offer. And so for the investor, this is targeting an untapped opportunity where we can come in and target that apartment resident, and also the resident that is looking for something in the interim or midterm.
This is our site. Looks like Jacob posted the site in the comments here, parkrise.com. If you visit it, this is what it'll look like. We do have projects at the bottom of this webpage that allow you to see the type of product that we're building. This image right here is actually a finished image or a finished unit at our McAllen property that we're actively filling up right now. And this is a fully furnished space. This has, I mean, even a TV, internet, utilities, everything's covered. Our long-term vision is to build 25 to 50 of these flex apartments and then sell them to a major hospitality brand, or REIT, or a hedge fund. And we want to do this within 5 to 10 years. We follow a lot of different groups that have done this already, which we'll talk about here pretty soon. Jacob's going to tell us a little bit about the demographics of who's staying.
Sure. And you look at a traditional extended stay like Candlewood Suites or any of the other extended stays, and primarily it's the traveler that they're focusing on. For us, we're looking for mid and long-term stays for locals. I mean, the more stability that we can have from a local living in our flex apartment, so to say, the better. It still follows our theme of motel to apartment conversions, but we're also uh, accepting and accommodating to travelers, to contractors, medical professionals, corporate housing. It's the in between on you don't want to pay a fortune to stay in an extended stay for 3 months, and you want to live in a place where it feels like home. And so instead of instead of targeting the nightly guest like a traditional hotel does, or maybe a week like an extended stay, we're going for mid and long term stays. We're thinking months instead of days, but also we have that flexibility to accommodate the traveler in a more comfortable home like location that is apartment style living, that feels more like an apartment than a hotel. And so this is one of our projects. If you've joined us in the past, you've seen our conversion project for an apartment, a motel in McAllen, Texas, Studios on 4th. You can see some of the before and after pictures here. We're added an L-shaped countertop, full kitchen, and this is how our conversions will look like going forward. These apartment style conversions. So we rebranded from an independent motel to Studios on 4th.
Yep, and that was a fun project. Learned a lot along the way. Going forward, we're most likely not going to purchase 1950 mid-century style motels. We are looking at mid to upper class style properties in the greater MSAs of Dallas, San Antonio, Austin. But this was a great project. It was a great learning opportunity. And right now, the updates include we're hiring an on-site manager. We are getting someone there to handle operations. We're opening up other OTAs. OTA stands for online travel agency, including Airbnb, Booking, and so on and so forth. We are still long-term leasing these units. We do have a $900 a month average per unit, and we're shopping refinance lenders. And we are looking at distribution targets still in Q2. So we're actively pushing this project to the finish line. And Viva Studios, this is really a genuinely first ParkRise iteration. This is in Brownsville, Texas. This is 80 units plus a restaurant, and it's trucking along. It's been a little bit of a challenge with the city, and we're trying to get on the same page, and we're pretty close. We're just working on a couple semantics, but this is going to be operating really well. It's already operating as a flex apartment. This is an official flex apartment today, and as it sits. And 40 units are operating. The other 40 are under construction. Here's some video of the current renovation process. Obviously, we got some debris that we're picking up and cleaning up. But these are now newly painted. We're making repairs and upgrades and improvements on the inside and the outside. And this has been just a really fun project. This is more of a courtyard style architecture, your 1970s hotel. And we've been revamping and turning around into that flex apartment ParkRise stay. These are the units that we're currently working on. There are 40 of them, 20 up top, 20 below, and the doors have been completed. Walls are opened, electrical and plumbing are installed, and we're waiting for inspections. Here's the room design. This is where we stand out. This is where we're different. If you notice, we have a kitchen that's more of an L-shaped kitchen. It feels like a studio apartment. Nightstands, bed, TV, internet, furnishings that really make a place call home. And that concludes our webinar. If you want to get in contact with us, learn more about us, hop on a call with us. In fact, that's my cell number on the screen. You can give me a call or a text anytime. You can give us an email. If you're interested in investing with us, please hop on a call. We'd love to discuss your investment criteria and your goals. We definitely can make that happen. We're going to be in Brooklyn, New York here pretty soon in the next couple weeks for a family office conference. And hopefully we'll see you there if you're going there. If you're not familiar, go to familyoffices.com and register as a charter member. And hopefully we can shake hands. Thanks for joining us today, everyone. And we'll see you next Thursday at 1 p.m. Eastern time.
Thanks, everybody.